Crypto's biggest signal yet may have just flashed, and if you're not paying attention, you could miss the next leg entirely. Today I'll show you the real signs the pros watch: macro, on-chain, institutions, altcoin ecosystems, and how to position without gambling your rent. And no, your cousin on X yelling "we're so back" doesn't count as data. First, the macro. The Fed recently dropped the rate by 0.25 points. When financial conditions loosen, risk assets, tech, stocks, and yes, Bitcoin tend to do better. Equities have been pushing new highs recently. Bitcoin still trades like a tech stock on steroids. When liquidity returns and stocks grind higher, crypto usually overreacts the same direction. Bottom line, macro wins aren't perfect, but compared to 2022, much friendlier. Second, the cycle. The latest halving was April 20th, 2024. That cut miners' insurance half, from 900 Bitcoin daily to 450. Historically, the most powerful part of Bitcoin cycles tend to arrive about 18 months after the halving, not before. That puts us squarely at the time we're about to see some explosive gains from this part. On-chain, we're also seeing exchange balances trending down. Fewer coins sitting on exchanges equals less instant sell pressure. Long-term holder supply are nearing highs. Patient wallets are not dumping. Whale accumulation is returning in pockets. Big wallets are quietly prepping. Third, institutions. Spot Bitcoin ETF opened the doors for retirement accounts and RIAs to simply buy Bitcoin. That's huge. This cycle isn't only retail, it's Wall Street flows and portfolios falling into the mix. We're also seeing a slow normalization of corporates owning BTC or Ethereum exposure. Imagine when the 1% Bitcoin allocation becomes boring CFO risk management instead of rebellious idea. Trillions sit in that world. Imagine it flooding into the crypto markets. The suits finally found the buy button. Fourth, ecosystem. Ethereum keeps scaling L2 fees and they're trending up. Solana clawed back mind shares with real users and fast UX. Base is exploring a network token. That's a big signal of intent to decentralize and supercharge incentives. And yeah, there's the meme coin barometer. Like it or not, rising meme activity equals retail curiosity. Early bull phases start with playful risks. Assume the bull cases might be starting, but plan like it might not. A simple framework for this is 50% BTC allocation, 25% in ETH, and the last 25% in higher risk or emerging narratives, or the small caps, even the memes. Use DCA on entries and pre-plan exits. Scale out into strength. If you don't schedule profits, the market will schedule humility for you. CTA for safety, and please set up two-factor authentication. Use self-custody wallets, bookmarks. Watch out for scams. These are all things that'll be rising through these times. A quick checklist before things get spicy. Set DCA buy alerts. Decide your take profit ladder now, not at euphoria. Move core holdings into safe custody. Yes, top exchanges and even Coinbase tend to go down at peak euphoria times. Track a few on-chain metrics and pick 2 or 3 ecosystems to actually use: Ethereum, Solana, or Base. Do you think we're already in the early innings, or if it's just a warm-up rally? Drop your take below. I read every comment. The ingredients are on the counter: friendlier macro, post-halving dynamics, institutional rails, and growing ecosystems. Is that a guaranteed bull run? Nothing in crypto is guaranteed, but the risk reward looks better than it has in a long time. If this helped, hit that like and subscribe, and share it with that one friend who always buys the top. We love them. We must protect them. Thanks for tuning in. Cheers.